Hi, good evening, everyone. Welcome back to the channel. So we have beat this subject up over and over again, but believe it or not, there actually may still be a hidden strategy to not only completely eliminate NAV erosion, but at the very least to drastically reduce it. And we've already seen it in a few YieldMax ETFs. And like the saying goes, the best way to hide something is in plain sight, because this clearly is hidden in plain sight. Um, Now, this is also a theory that we're going to test during the video. Um, and I'm also testing out the YouTube Live on my main desktop. So let's see how it goes. Screen sharing is a little iffy, but we're going to go over our favorite new ETF. Well, it's not new, but it's our newly favorite ETF, ULTY. Um, so as you all will notice, those of you that have been following ULTY, it started at around what's this? Why does Misty no nav protect? That's a good question. We'll look at that. Um, but you all will notice that ULTY, while it dropped from $20 to 627 over a year, um, it did something within the past few months that actually stabilized the NAV significantly. And we're going to look at ULTY and some other funds to examine a theory here. So stay tuned. We got an exciting one here. All right. So if I share the screen, let's first test that before we start testing theories. All right. So if we go over here, let's see. Okay. It looks good. June Universe says hi. Thank you for that. Okay. So if we look at, so ULTY, in this case, we're going to be asking why ULTY no go down. Of course, we don't want it to go down. You see me on the tube, huh? Well, that's good. Okay, so folks, what do you notice when you look at a chart? And as the saying goes, the chart never lies. Um, so you'll notice this chart is going back a year, and you'll see, hey, welcome passive earnings. Coach, what's the plans for Soxel options? I'm really interested in your approach. I'm in Soxel. How's that for an approach? I am definitely in. I can't really talk about much of an approach beyond that. Or maybe my approach is beyond reproach. How about that for a tongue twister? ULTY did go down. How dare ULTY? Now I don't like it anymore. ULTY is ROC, meaning return of capital. That's partly true, but focus. I want you all to put your thinking caps on and focus on the chart right in front of you here, because you will notice the line, while it was dropping steadily from September to around late April, what happened to it as we got into May? It's almost flatlined at $6 a share. So what would we call that? We would actually call that NAV stabilization. Now, when we've asked Jay about this, he says, "Oh, the best thing for eliminating NAV erosion is a bull market." Well, that's not quite it. I was thinking and doing some deeper delving in. Um, and for those of you, for Star Trek fans out there, what did Spock say? When you eliminate the impossible, whatever remains, however improbable, must be the truth. So when you do some deductive reasoning, what changed with ULTY within the past few months? And the answer is very easy for those of you that follow ULTY religiously. But I'll let people in the comments tell me what changed within the last like 3 months with ULTY. And 3 months, April, May, June, we're in July now. So we might be onto something here. So Harold Allenberg claims that ULTY went weekly. Now ULTY happened to go weekly sometime around the last few months. Passive Earnings says that's what I noticed. It's partly the change in strategy, but partly the new money flowing in. Well, let's examine these theories because, like I say, a truly hidden strategy, the best way to hide it is in plain sight, right? So okay, ULTY went weekly, he says. Um, does the correlation match up? Did around the time ULTY went weekly, um, did the NAV sort of start to stabilize? Well, look at the chart. Let's go. We'll go year to date here. And around April, we were still volatile, but once we bottomed out at 548, it's been smooth sailing from there. We've actually come up, and especially since May. Look at this. So since the dividend went weekly, the NAV is stable actually, and there's more to it than that, as United Lift mentions, ULTY uses puts, protective puts. So that is also part of a strategy. ULTY pays less and is easier to recover. So now we have different people are basically saying the same thing in a different way. So weekly dividends are one thing because you all have pointed out why you love weekly dividends because the compounding is much better on your end with weekly dividends. Also, my theory is that the NAV erosion is a lot better, and we're going to go look at every weekly fund, not just Alti. But Alti, you see that. I mean, the proof is in the pudding, as they say. It's like a flat line, basically. We don't want to say it flatlined, but in the case of NAV erosion, flatlining is good because flatlining means no erosion. Um, and I am going to get to those Soxal puts, but the audience likes Alti better, so I got to give the audience what they want, after all, because I'm a nice coach. Okay, so let's look at holdings because that also plays a role. So it's pretty balanced out. Like someone referred to it as a like a hedge fund within a ETF. It's pretty balanced out. It's tech heavy, but it's also got a good amount of financials, communication, utilities, industrials, consumer cyclical, and healthcare, and cash and equivalents, which we don't care about. Top 10 holdings: Oklo, Upstart, Strategy, Reddit, New Scale, Supermicrocomputer. Wow, what a great day for SMCI, right? And that's almost 5% of holdings. By the way, today was another great day for me trading options, another 5-figure day. If you all are in my Discord, you'll see the exact number. Discord's still free, by the way. I haven't gone total grifter yet, and I doubt I will. So Tesla, First Solar, IonQ. So a lot of tech stocks there. So all right, notice this, and then let's also look at what we're going to do. We're going to look at total return, which should be our favorite because that's the ultimate measure of a financial instrument as its total return. Okay, so since the same time, it's been on a tear. You see, it's been, if we go year to date here, the total return with dividends being paid out as and counted as part of the return, we're beating the S&P. We're actually almost double the S&P. So that's not only no NAV erosion, not flatlining, but that's increasing. And so basically what I'm saying, if I haven't come right out and said it, is that I believe, and I actually hinted at this in another video about Alti, I believe that going weekly was the solution to NAV erosion because look at the Roundhill funds. The Roundhill funds that are weekly don't have nearly the NAV erosion that the monthly payers do. So who knows? At this rate, if we were to go daily, maybe we'll reduce the NAV erosion even further. So that's true. The puts are true as well. And we're going to get into where we start analyzing the trades as well. But now let's do this here. Let's look at another YieldMax weekly one. Let's look at LFEGI, LFGY. This is the YieldMax Crypto Industry and Tech Portfolio Option Income ETF. All right, summary. So since this one technically it started, it's been a weekly pair. Um, it did drop with the market, but you can see it's been more stable since April, right? It's stable and increasing. So anybody that basically bought in after April, ignore the past, right? Because we're just looking forward. Anybody that bought after April is golden. They've gained like $8. So see, another weekly pair since April with a very stable NAV. Now let's keep going. Let's look at GPTY. I think we're going to see something very similar. So this one's more like a V shape. This one bottomed out in April, and then it started coming way back. This is the AI and tech portfolio because AI is on fire. I mean, AI should be killing it. Since April, let's look at the last month. Oh, down to 0.27. Year to date. So see how stable since mid-April, mid to late April. See how stable the NAV has been. We went from 35.76 all the way to 47.25. Now what I want to do is look at YMAX and YMAG. So this is my theory, the hidden strategy, basically. Anybody else have any comments? Please remember, by the way, to smash that like button. It helps the algorithm, certainly. Um, So let's see, passive earnings. Do you want to clarify your comment, ULTY's return of capital? Anything further to that? Like I know a lot of the dividend is return of capital, as with all YieldMax funds. Oh, let's see. ULTY has a pool of stocks and options, but Misty allows to sell covered calls and has a decent premium. I agree, and I think maybe Misty should switch to weekly. Let's look at YMAX, then we'll look at Misty because they're going to be paying a dividend very soon here. Okay, so YMAX. So again, we saw the same thing with a weekly payer. Actually, uh, I forget when it switched to weekly, but we've always got Google for that, right? When did YMAX switch to weekly? I should know this. You should know this, coach. Um, oh, since its inception, it's been weekly. Really? Hmm. Okay. Well, in that case, let's look at it since its inception then. Well, we do see NAV decline, but I would say, well, from 20 to 13. But again, we're seeing the same thing here. So maybe this is more to do with the market because at the end of March, we were 1192. Now we're 1390, and there was no switch to weekly. With Ulti, I do feel like the switch to weekly, the way Ulti trades, I feel like the switch to weekly did have a lot to do with it. Let's look at one that's not weekly for comparison. Let's go to Misty. Misty's NAV is choppy. You see, since April, we're still choppy. We've fluctuated like $5 plus or minus. So, and let's look at NVDY since these are all popping up here. Another weekly payer based on a really solid stock. This one should be. You see what's happened here because Nvidia is fully recovered and it's actually set new highs. So this is a monthly pair that still has NAV erosion. See, even since April, yeah, we've recovered, but if we compare this to the underlying, and this is why those of you that wonder, this is why I'm not like a super huge like unconditional lover of YieldMax. I am a little critical because I still believe the underlying outperforms. And this is my biggest critique of YieldMax, like I've always said. If you look at the underlying over time, the underlying always does better. And what particularly concerns me here, if you look over the last month, the underlying kicked the YieldMax funds behind. I mean, like 3x here. So 4% versus almost 13%. Now, obviously, as we can see here, let's get rid of the S&P for now. I guess it's beating the S&P in price return for the last month. But and we had some big jumps here, but like for this one, this had to be a dividend payout because why else would Nvidia be up and then they move in like opposite directions? So the price it almost mirrors in the short term, it can almost mirror the underlying. So see, over the last like 5 trading days, it's actually mirrored the underlying. If only they could do that all the time. But as we know, a covered call strategy is never going to do that all the time. So 6 months, see opposite directions. And I know that's just price return, but total return, we're going to see something, you know, it's close. You got to remember this, okay? Total return 28.07%. You're still not at what the underlying is, and you're paying an expense ratio. You've got to keep all those things in mind. So, and this is what concerns me about this one. And I think because it's a monthly payer, that NAV structure is just not as stable as what we've seen with the weekly payers. Okay, let's see. YMAX was eroding a ton when it was monthly, then it stabilized somewhat when it went. Yeah, but when did it go weekly? Because I don't trust Google in this sense. I don't actually trust Google. The thing too with monthly is the payments vary a lot, but with weekly they stay relatively the same. That's true. Look how stable Ulti's payments have been. Going to weekly stabilizes nothing. Well, it's a theory. We didn't say it was fact, so we can argue theory. Some of you like to argue fact though, which is interesting. Um, oh, Andre Brown. I have noticed that the funds that actually hold the underlying stocks instead of synthetics generally hold their NAV better. That's true too. When you're actually holding, instead of holding the synthetics, you're actually holding the underlying stock. Let's look at, since we got away from it, let's look at YMAG. So YMAX, as you all know, is a pool of the YieldMax ETFs, which are synthetics basically. YMAG actually holds underlying. So I tend to like those type of funds better. Now, in price return, YMAG has been down over the last, you know, 7 months or so, going on 8 months. 6 months, we're seeing similar, but we have seen stabilization here since, let's see here. Yeah, since April, since 420, basically, we've seen a very stable NAV. And as far as I know, nothing changed, nothing switched to weekly there. All right, let's read some more comments. So the theory's not proven, but it is a theory. It's a viable theory, at least with ULTY, I think. Uh, let's see. Yeah, if you look at Rex and Round how they're doing the best return wise, right? Weekly, right? Uh, that is true, and it makes sense too. Holding the underline, he says underline, like line, not lying, is I gotta bust your chops on that. I'm a spelling guru, stickler. It makes sense too. Holding the underlying asset and manually timing the options by looking at macroeconomic factors can definitely make NAV stable. Um, yeah, 100% agreed on that one. All the fun Y Max and Y. I thought one of them traded. Oh, it's just synthetics for the set. Total return went down 18% in April, and Nasdaq went down 16%. It follows the market. Uh, I would disagree. It doesn't follow the market, and in fact, we can prove that actually. Um, So you said total return, you didn't specify a fund. You just said total return went down. Oh, I presume you're talking about YMAG. So we can easily switch out S&P for NASDAQ or for the Qs. So let's do that. Okay. So comparing an index to an index, what I see, and this is just price return, down 20%, up 11%. But I know you're talking about total return. So what I see is, oh, NASDAQ still outperforming. Shocker. And I'm not trying to be, rude or anything. I'm just saying it follows the market, but it still lags behind because it pays out a dividend. So it has to lag behind. It's a covered call strategy, right? It has to lag behind. So anyway, with Ulti, I'm convinced that the weekly has changed it significantly, especially the way the way it trades. The weekly payout structure has helped stabilize the NAV. I'm almost convinced of it with that one. Maybe not so much with the other weeklies, but I am convinced with Alti. And then who knows? Maybe if Misty or some of the others go weekly, maybe we'll see the same thing. But I mean, if we look at just some of the indexes for like, actually, you know what? Let's look at QDTY. Let's look at, because these are basically, aren't they copycats of the Roundhill ones? So let's look at QDTY, and then we'll pull up QDTE. So many ETFs. I guess they make it seem easy to launch an ETF. Okay, so how about this one, QDTY? Well, that's not an apples to apples. Um, no, we need to go like 6 months here. They're almost the same. How about this? They're almost identical. So why choose one over the other? Let's go to, it looks like February 13th. So we're still examining the weekly structure here when it comes to at least index ETFs. February 13th, the day before Valentine's Day. Let's see. All the way to present day. Today, Monday is in the books. Okay, actually, QDTY looks like it's beating QDTE. And we had a day here where they must have really won some good trades because they really beat them there. But these both basically have a similar structure, right? So if we look at, we're gonna have to go 6 months. Okay, QDTE and total return is still beating, but we got to go to February 13th. Let me see here. Oh, I got to do this again. All right, February 13th, bear with me. So February 13th over here, all the way to July 28th today. So they're really close. All right, we're not going to split hairs here, but one is like 1% better than the other one. Okay, and if we go back to summary price turn for just for QDTY, this has always been a weekly pair, of course, and we saw some NAV decline, but not terrible. Within $5. But again, since April, we see that NAV not stabilizing, but increasing. All right, let's see. All the funds. Yeah, we read that one. There's leftovers in the fridge, mom says. Maggie blocks. No, I ate a full big lunch today. I'm skipping dinner, trying to lose weight. Sold COIW. I got to start talking about those for more coil. Rex does a better job with the Coinbase fund. Still love Houdini. Who. That's what I love that ticker for Robinhood. Let me just look real quick here. Um, let's see. Coil versus COIW. There's a lot of new funds for us to cover. The Roundhill Coinbase Weekly. Let's see how this one's doing. Look, it's increased. Well, because of crypto Coinbase, right? And then let's look at COIL. Wait a minute. That's not a ticker. Are you pulling my leg here? He said coil. What happened to SMCY? Oh, it was phenomenal. I closed some options in it. It was amazing. Um, okay, since someone mentioned Soxel, this is my first trade I've ever done on Soxel, so this would be bonus content. So, as some of you all know, there is another way to make money. Oops. There's actually another way to make money that's not dividend income, that's known as trading options. So, I'm going to actually show uh, my open position in Soxel over here. Basically, oh, I'm down in it, but what I have, it's a January 16th, 2026, expiring at $32. I went $32 for the strike price. I collected about 8,800 in premium, and it's moved about $250 to the opposite way. So who knows? I may just open this trade again. Now, as far as SMCX, I closed a really good one today because SMCX did phenomenally, and I actually wish I would have left it open. So let's see here. We're on this screen. Let me just share this real quick. Need new glasses? We will take you to the optometrist soon. Yeah, I will in a second. What do you mean new glasses? I got LASIK. I don't wear glasses anymore. I'm back in the cool kids club. I'm not a nerd with glasses. Okay, yeah, real quick here. I know this is what we're really into, right? So we got to watch a YieldMax video to get to the real gold. Oh, did I say that? Somebody will say, "Wait, you don't think YieldMax is the real gold?" Um, I maintain an objective opinion. I'll just say. Okay, so real quick here, my trade that I closed today, I didn't put the specific trade in the Discord, but it's right here. I might actually be my biggest win, but I'm knocking myself a little bit because I think I could have added another 3 or 4 thousand to it. Here we are. Here we are right here at the bottom. SMCX, September 19th, $53. I bought it back today. So I originally collected 33,686 in premium. Bought it back this morning when I saw how well SMCX had moved up because SMCI had a great day because earnings are coming up. Um, so locked in 19,073 in premium. But check this out. So that was 1684. Look how far it got down. Hold on a second, because if it's that low, I'm gonna like punch myself in the face. Hold on. Let me do this here. Go to trade. So we're off topic, but this is bonus content basically. So let me go here. SMCX. I want to look up what I basically, if I held this till close of business today. So I had 20 of them. It's actually September 19th, and it was at $53. Okay, never mind. Okay, so it was. Well, why did it say 16? So wait a minute. You mean to tell me, like, I would have only made another $1,000 on it if I still had this open today? There's a wide spread on these. Look at that. That's insane. There's a wide spread, which suggests an illiquid market. Okay, he asked about Soxel. So here's what I see. So Soxel, if I was making a trade on this, I went out because, as you all know, I like to collect premium. So I go a little far out, and I like the time value too. So if I were to do 10 of these, I collect premium on the time value and going far out on the options. So I think I went November 21st and I went $32. So at a trade like this on 10 contracts, you could make about $8,000. Um, let me see. No, I think, didn't I say January? And I might have closed one before, but no, I did go January. So January, I would collect 86.50 right now. If I go to my closed trades and Fidelity, let me see real quick. Um, let me see real quick here if I closed one or not. Um, it's amazing what I've been able to do with this account. I did close a Soxel trade. I made $616. So I am officially in the club of making money on options trades of SOXL, which I've wanted to do for a while. Another feather in the cap. Wow, I switched to options content. I still got 44 of you on. Amazing. The funny thing, oh, I'm sorry. I'm not sharing my screen, am I? Wait a second. Sorry about that. Let me switch over here. Here we go. Let me just do what I said again. Okay, so I'm on the Schwab screen. Sorry about that. Uh, Ulti, Coach, do you want to share? Yeah, I'm sharing now. Coil, COII. Yeah, I got to work on your spelling. See, I think you're the one that needs the glasses. Who would have thought? So for those of you that don't know, Costco 777 is my online dad. So he always says, "Mom and Dad are so proud of you." So he's actually my online dad. So that's his title. He's actually, I when I realized who he was, he's one of the OG fans of the channel. So I'm glad. It says a lot that we've been able to retain, people for several years now. He says can't see screen. Well, I'm looking at my screen, which is a screen share and a like kind of mirror, and I see it. Let's see. We don't see what you're looking at. Well, now you do. You should. Married to coach's mom, wonderful woman. Well, yeah, to produce someone like me, right? Rex coming out with more single stock ETFs. Love you too, man. I agree. Weekly 9 to 10 cents are easier to recuperate. Yeah, aren't they? Second, since they had so many people criticizing Alti, their admins probably started paying more attention. Hey, I'm still critical of Alti. I point out, and some of you don't like it, but I point out that Alti used to trade at $20 a share, and it's at 627. So all I say to that, I just say Alti can't be the best ETF known to mankind if it once traded for 20 and it trades at 627 now. That's all I'm saying. Chart is delayed. Ah, Sigma Cadabra. What is that, like a spell? Then YouTube started promoting it positively mostly. That's true. If you repeat something enough, and that's a lot of times that's what the haters do. So what I've realized, like haters and bullies, what they try to do, they try to gaslight you into believing what they say about you is true. So it's like the more they say it, it's like a mental pattern. That's what goes on. Maggie blocks who, what's that, a sentence? Sounds like you're speaking another language now. All you need. Well, that's what he says. He says that's your whole portfolio. All right, so let me go over the Soxel trade again. So this is what I did basically. Puts sell to open 10 of them January 16th, $32 because Um, I go out a few dollars to collect more premium. And as you know, the further out you go, the more, see, that doesn't make much of a difference. Even a year, look at that. That's not great. But anyway, that's the open trade I have in Soxel. What I'm looking at for SMCX right now, because you all know I can't resist. You know I'm going to get back into it. So what I'm looking at, and this is the strategy that's been working very well all year for me, because I don't want to open the trade I just closed. Let me see something here, because I had a friend do it at like 43. Let's see what he's at. Oh wow, he's realized all of that one. Okay, that was August 15th, 919. Um, Okay, so instead of opening the same trade, basically, see, so it didn't, even though it's so weird, because even though SMCX moved up basically 22% in one day, this trade, if I kept it open all day, wouldn't have made me much more. But what I'm looking at doing is possibly, and I don't want to do this because I know this is a volatile fund, but I'm looking at possibly going out to 60, possibly going out to December. So if I go December at 60, but because it moved so much, I'm even thinking about going to like 65. But as you all know, if I pull up the calculator, it won't show, but let me just do the math and spell it out for you all. So 39,200 divided by 2,000 shares, that would be 1960 in premium. So subtract that from 65. So you would actually be buying in at 45.40. But I thought the premium was more, I guess because it moved so much. Anyway, earnings are tricky. It's tricky to trade around earnings, but basically I'm looking at a trade like this because oh, you play golf with Jay Pestrochelli. So yeah, you're in the inner circle for sure. We all make mistakes you aren't defined by your past. Ulti was willing to change for better, like a great spouse. Well, eventually, what I say is my future spouse is out there. So eventually she's going to pick me over who she's either currently with or maybe she hasn't been married yet. So who knows? But we'll see. We'll test that theory too. Anyway, so that's the SMCX trade. I hope I showed you all a few things here when it comes to options. We weren't even doing an options video, but these are my trades. And oh, also NVDL. Let me show you all this one real quick here. This is a true gem. I'm sitting on this one right now. I can't close it because of my I can't close it because of my trading pre-clearance policies that I have to deal with, which have helped me because of a 30-day rule. I would have never held SMCX into the morning here. But see this trade at the bottom here, ignore Tesla, which I'm down 50% in. But this trade right here, NVDL 30 contracts at $80 strike. I've realized 21,355 of that. So I can't wait to close that bad boy and add him to the list of gains this year because this year's gone phenomenally. So see that this is mind-boggling in this one account, 88% win rate. If I combine the Roth IRA though, 150,000 in this account as of today. Once I closed out the SMCX trade. So even though I'm saying, oh, I could have done better because it kept going up, I made money. I made money. So I really can't complain. If you made money, you can't complain, right? I mean, it's like how much is enough, You got to think about that. Anyway, folks, I think that's going to do it. Let's see. Costco 777 here is going nuts. Take coach to driver's license place tomorrow morning early. Yeah, I'm just starting to get my learner's permit, right? All right, folks, thank you all so much for tuning in and staying tuned all the way throughout the video. Passive earnings might be on to something here. He's saying options are greater than high yield dividends. He just might be right. I would say actually he is right. Um, but there's one topic that gets the views, and there's one topic that doesn't so much. That's why I cover YieldMax, and then now I'm starting to do options at the end. So that way, if you all pay attention throughout class, by the end of the class, you get the real material, I guess. I'm going to walk around the neighborhood and smoke a J. I think I know what that is. You'll never get broke by realizing gains. All right, on that note, yeah, options are amazing. I've basically tripled and quadrupled my dividend income with options. So I will leave you all on this with this screen here. The proof is in the pudding, as they say. Thank you all for tuning in. Please remember to like, comment, and subscribe and join Discord. Smash that like button, and we will see you all in the next one. Take care. Have a great night. Bye.